Hello, everybody. This is Chuck Carnevale, co-founder of FastGraphs, the fundamentals analyzer software tool, aka Mr. Valuation, bringing you another Lessons in Valuation 2-minute drill subscriber request series. This one's going to be on Meta platforms, aka also known as Facebook. And one of the points I want to make, we're looking at adjusted operating earnings here, and we're plotting the adjusted operating earnings going back to 2012 when the company went public. And I'm going to make a strong point. The rate of change of earnings growth, in the case of Meta, it's been 29.71%. That's from point A to point B. That's very fast growth. But I want you to notice as I cut years off of this graph, the earnings growth rate slows down. And I'll cut a few more years off, and the earnings growth rate is slowing down. So that's something, that's why this analytical tool is important. Now, when I put weekly closing prices on the graph, I want you to see that the rate of change of earnings growth, or the growth of earnings, is what ultimately drove stock prices here. If I buy this at a PE ratio very similar to its growth rate here and hold it, I earned over 22% a year, but again, driven by the growth of the company's earnings. And the company is just now starting to pay a very small dividend with a payout ratio that's very low. We see that instantly from FastGraphs. Another way to look at this company, and another way that I like to look at companies, is through EBITDA, which is another form of cash flow. Now, EBITDA growth has been about 29% historically. When I'm looking at forecasting, EBITDA is expected to grow at 20%. The company's currently trading at a blended price to EBITDA of 17. So I would look at a valuation of at least 20 times earnings being fair value. If it ended up earning the amount of EBITDA, or generating the amount of EBITDA that these 37 down to 22 analysts expect, then the long-term rate of return here could be over 33.56%. However, I do want to point out, if I look at this from a standpoint of adjusted operating earnings are only expected to grow at 11%, and you would have to apply a very high multiple of over 25 times earnings, which is not really justified, in my opinion, by that. So Meta is an interesting one here. It's a very fast-growing company. It's been a very fast-growing company. It's had 2 down years of earnings. The question is, if you're a value investor like I am, should you be investing in Meta or not? I started investing in Meta down here. I'm not so sure I like it as much at these levels. Thanks for watching. If you liked the video, subscribe to my channel, give me a like, and take a look at subscribing to FastGraphs. Thank you.